All about stocks this week, both the Sensex and the Nifty end the week flat. A selling pressure is seen on Dalal Street. What should your investment strategy be? Bank stocks in focus this week will give you the best picks in the space. And Sharmila Joshi tells you why you should be investing in Hexaware and IDFC for the long term. Welcome to All About Stocks. This is a show specifically meant for long-term retail investors. Now, the markets have turned cautious ahead of two big events, the RBI policy meet and, of course, the general elections. Over the next half hour, we'll tell you what your investment strategy should be going into the next week to make the best returns possible over the long term. We'll also take a closer look at bank stocks and find out if there's anything interesting in that space that you should be picking up right now. Remember, we have an email ID that's at the bottom of your screen where you can send in any question you have about your stocks. Ajay is here to update us on how the markets went this week. Ajay, what's going on?
Well, Faye, it was a very ordinary week for the markets. In fact, the large caps were very range bound, mild, uptick coming in for the benchmark indices. In fact, the broader markets were particularly weak. For almost second or third week, we are looking at weakness setting in as far as the mid-cap side of the market is concerned. And Nifty actually traded in almost a 90-point range. So it was very tight range trade and was making it very difficult for traders to trade on the Nifty as well as Bank Nifty. Third quarter earnings, of course, passed by in line with estimates. So no nasty surprises coming in as far as third quarter numbers are concerned. That is cushioning the market. Apart from that, the fund flows have been mixed. Nifty has been able to find some support around the 6250 mark. However, it is at the same time not being able to cross the 6350 mark. So that's the 100-point range we are talking about. Markets, of course, are witnessing particular pressure from banking stocks and financials. Up till now, the consensus was that on 28th of January, RBI will perhaps hit a pause button because CPI, WPI have turned weak. But ever since Urjit panel report has actually come out, opinion is divided among the economists whether there could be a hawkish stance coming in by the RBI or there will be a pause on the rates. So that has soured the sentiment among financials, and hence a lot of pressure being seen as far as financials are concerned. But it was very stock specific approach which market took this time round. Good stocks are being rewarded, good performance in third quarter were being rewarded on the upside, whereas weak ones were punished on the downside. So very stock specific market.
All right, Ajay, thank you for that update. Joining us today, Sharmila Joshi of sharmilajoshi.com. Thank you so much for coming in. Of course, I'm going to ask you what you're expecting from the RBI, given all of the numbers we've seen come out on the macro economic front. What is your expectation in terms of what the RBI will do next week?
I think nothing, because he was very categorical when he spoke last time that there were certain expectations because of which he had left rates unchanged, and I think it's played out pretty much as he thought it would. That you did see that correction coming in food prices, etc. And the other data has been weak. So there is really no room, I think, for him to increase rates at this point in time. So market should not be too concerned about that. Nor do I really see anything enough for him to cut rates from this point. So I think it'll be just more of the same. He may just reiterate the view that he had in the last meeting. The only, as I'm saying, the positive takeaway is that you won't see a rate increase, which you would have if things had not played out as he had thought, that in terms of the correction coming in vegetable and food prices.
Now, I want you to focus on the banking sector a little bit for us. Now, given the numbers that you've seen, the levels of NPAs at this point across the sector, do you see value in the banking sector at all at this point, especially in the PSU banks?
I think that the concerning thing has been that you've seen a lot of the NPA asset quality pressure coming into the private banking space, which maybe one quarter earlier we weren't seeing. They were somehow it seemed that they were managing their house better. But in this quarter, for instance, it's quite evident in the way, whether it's IndusInd Bank, whether it's Yes Bank, and all these, it's starting from the base level is very low. But if you really look at it in absolute terms, then the number has gone up quite a bit quarter on quarter. So I think that's the concerning bit. So I think for PSU banks, certainly it means that recovery is still some time off. Because if there is a recovery, I would think that private banking space would hold their own better. So again, I think the horizon would definitely be at least a couple of quarters down the line for you to really start seeing the recovery.
Would you say that now is the time for us to question the PSU banks in our portfolio and find out whether or not we want to stick by them?
See, if not question, I think you have to forget about them for a while, because I don't think that they're going anywhere for some time.
When you say a while,
I would say at least a year.
At least a year?
At least a year. Because, clearly you will have to give a couple of quarters for things to start improving in their favor, and then another couple of quarters for it to start showing in their numbers, and maybe the market to start looking at them positively. So I think it's at least 2 or 3 quarters too early to be talking about the banking sector.
Is there a banking stock at all that you would buy at this point?
No, there are lots. I mean, I'm not saying that, as you're saying, in terms of valuations, a lot of them look good. And again, I do think that if you really see the market going anywhere higher, there has to be some participation of the bank. And look at the dichotomy, like you're so close to an all-time high, but the banking index is still very far from, their earlier level. So there has to be a better participation from banks. So whether it's an ICICI bank, whether it is a bank like an IndusInd Bank, I do see higher levels. But even in terms of PSU, I do like a state bank at this level still. But the thing is that I think in terms of price appreciation, you're going to have to wait a little longer.
I want to take a few questions right now. Rajendra has written in 300 shares of HDFC Bank, which he bought at 640 rupees. He wants to know if he should hold on to that stock. Now, HDFC Bank, as always, had good numbers, 25% year-on-year up on those numbers, and asset quality seemed stable. Would you like him to hold on to HDFC Bank?
Absolutely. I think there's no reason to, really exit HDFC Bank, because I think really irrespective of what is happening in the entire banking basket, HDFC Bank is pretty much able to deliver this kind of a number quarter on quarter, I think for the past 8, 10, 12 quarters, which is pretty amazing. So yes, I think it's a clear hold for HDFC Bank. I wouldn't exchange, I mean, you can buy other banking stocks, but I wouldn't buy in lieu of HDFC Bank anything else.
All right. We also have a question from Bala Raj, who's written in, he has 5 shares of Kotak Mahindra Bank, which he bought at 637 rupees. Should he hold on to that stock? Numbers in Kotak Mahindra were disappointing. Would you recommend holding on to that one?
See, I think, that's what I meant, when I said that some of these newer banks, you've seen the NPA concerns. So whether it's a Kotak, whether it's an IndusInd, whether it's a Yes Bank, you have seen that concern come creep into their numbers. It doesn't mean that things could get incrementally worse for Kotak Bank, but it just means that things are not as good as they used to be. So I think he can continue to hold on to Kotak Bank because unless he wants to shift to an HDFC Bank or some such stock. But I think all of them will have, their days. Whether, I mean, like you will see maybe an Axis Bank, it's because it's such a high beta stock. When banking stocks actually start moving, Axis Bank is always the first to move, but it's always the first to correct also. Okay. So, each stock has its positive and negatives like that. So I would really just stay put with Kotak Bank, given that it's a fairly decent stock. But yes, this quarter numbers were disappointing.
All right, we also have a question from Sanjay, who has 17 shares of IndusInd Bank, which he bought at 277 rupees. He wants to know if he should hold on to that stock. Now, he's making a decent profit. Although you named it as one of those banks that's having trouble right now, he's making a profit on IndusInd. Does it make sense to take that money off the table?
Oh, yes, I think, he can, and maybe he can reinvest it in some of the other banking space, but he can hold on also because clearly the results were better. His buying price was good. He must have bought it before it became a part of the Nifty. And the stock has benefited after it's become a part of the Nifty. You've seen a good run up in the stock. And yes, I think the NPA concerns did show, but still I think the picture is a lot better than it's for some of the other banks. So from that perspective, he can clearly hold on to the stock, but simply because he's making profit, if he wants to take some of the table, that also I think is an okay strategy.
Let's take a look at one of our portfolios. Avijit has written in. He sent us a list of his stocks and he wants us to tell him which of these stocks he should be holding on to. He has 10 shares of Bajaj Auto, which he bought at 1,990. There's, of course, a flurry of launches planned by Bajaj Auto. Would you recommend he holds on to that stock?
I think so. I prefer it to Hero Honda at this point in time because we are seeing Hero MotoCorp, as it's called now. It's losing a bit of market share to their Honda bit. So from that point of view, I think it's a little concerning. So at this point in time, I prefer a Bajaj Auto to Hero Motor.
All right, which is interesting because he has 6 shares of Hero MotoCorp, which he bought at 1,770. He's making a profit there. So would you recommend he pulls that money out, maybe moves it back to Bajaj Auto?
I think so. As I said that going forward, I find the strategy of Bajaj Auto a little better than Hero MotoCorp. And since he's making money on one and losing on the other, maybe, he can buy the other and, buy the one where he's losing money and kind of hold on to that.
26 shares of Sun Pharma, which he bought at 595 rupees. Now, Sun Pharma has, run up so fantastically over the last 1 year. Unfortunately, he hasn't caught that run up. But how much more can he expect over the year to come?
The good thing for Sun Pharma is that in terms of numbers expectations, they've always outperformed whatever the analysts had in mind. The bad thing is the price that he's bought at. So it's a little late for him to have entered Sun Pharma, but I think within the pharma space, it's a good stock. So if he has a reasonably long-term horizon, then he should stay put. But as you said, I don't think that the returns from this level will be like runaway. So maybe he can expect levels of 660, 680, like that, moving up slowly. But it's a great stock if you're looking at a longer-term picture. But from a shorter-term picture, yes, I do think it will be a little range-bound.
All right, last 60 shares of Yes Bank, which he bought at 410 rupees. Now, Yes Bank has always been named as one of the more promising banks if someone's looking at the banking sector. Given the levels he got in at, would you recommend he holds on to it?
He's making a loss, so I think again the level from my point of view is a little bad, simply because maybe he bought it before all the concerns started, and before that we had seen the stock zoom to whatever 500 plus levels. But you had concerns for Yes Bank because they're a lot dependent on wholesale banking, and that's the part of the banking sector that's taken a hit. So they have concerns on that front, as well as concerns from a corporate front, with all that boardroom battle going on. So I think that even if it moves up, it's going to like maybe halt at that 380, 390 kind of level. And if it consolidates there and then makes the next up move, then it will cross his level of 410. So I think it again becomes a question of how long he wants to stay invested. It's not a bad stock to have bought, but I think it's just the bad circumstances around the stock that have caused this big correction. So if he has the patience, he should hold on. Else he should look to switch. I think even on correction, if you do see a correction in the market, maybe you should use that opportunity to buy maybe even an IndusInd Bank cheaper rather than staying invested in Yes Bank.
All right, time for us to take a very quick break, but stay with us because when we come back, Sharmila has picked out 2 stocks that you can buy right now for long-term returns. Don't go anywhere. Welcome back. You're watching All About Stocks on ET Now. Thank you for staying with us. Sharmila Joshi is with us as well, helping us put together a strategy for long-term portfolios. Now, Sharmila has brought 2 stock recommendations for us this week, the first of which is Exaware Technologies. Tell us why, out of the entire IT pack, you prefer this one.
Because it hasn't moved, one reason is. And the reason why it's not moved is also because of the fact that when they did that sale to bearings, they did it at a price which market didn't exactly like. So, in fact, you saw the stock coming off from there and it consolidated for the longest time, in that 118. 120 kind of range. But, going ahead, I think their numbers are going to be decent. So you will have the stock getting better valuations on the basis of sheer numbers alone. And also, I think that the fact that Bearings has bought into this company with a slightly, meaning in a fairly long-term kind of a view in mind, the management has spoken of 8 to 10 years. There are a lot of positive synergies that will work in the favor of Exaware that will come from Bearings being a major investor. And we haven't seen that play out in the numbers or the kind of business that they've been able to generate for Exaware. So I think both positives will play out in the coming year and a half, and that should, I think, take the price to at least 180 levels, which is also actually a fairly very conservative kind of a valuation that you're doing for Exaware. So if this company manages to stay on track as far as their current earnings tick is concerned, then I think 180 is a good target for Exaware.
In how long do you think we'll see 180 on Exaware?
I think we should give it a period of about 9 to 12 months.
All right. Now, the second recommendation that Sharmila has brought for us is, of course, IDFC. It's a banking license candidate. We know that. What do you expect from the IDFC's earnings, which we haven't heard from you?
Yeah, I think the numbers are on 31st. It's a good idea to wait till the numbers to buy. But I'm not really expecting any shock because we saw in the last quarter also in a fairly challenging environment they've managed to kind of do an okay kind of job, and the management also indicated that they would be kind of meaning not outperform, but they would be able to hold their own. And given the way they are poised and their expertise in being able to get the infrastructure projects, the fact that they're able to tie up international financing also and all this, so they have a unique advantage in that sense. So I think from that perspective it's good, and of course I think the banking license will be a good ticker. What we've also seen is that they've actually sold, they bought down their FI holding. So, to my mind, it becomes a win-win situation, because if they don't get a banking license, then, that FI holding will just automatically go back to its earlier level. So, one of the reasons why the stock has fallen off sharply from that 115, 120 levels is also because you have this, suddenly you have a lot of floating stock because they bought down their FI holding. Right. So, that you will get that bump up any which way. And if they get the banking license, then I think in any case you will see hopefully some positive sentiment rub off on IDFC. So I think 140 is a good target to keep in mind for IDFC.
All right, so two recommendations right now. We talked about IDFC and we talked about Hexaware. Let's take a couple of questions. In fact, Himanshu has written in. He has 250 shares of Ranbaxy, which he bought at 393 rupees. He wants to know if he should hold on to that stock. Now, for those of you who were not familiar with what happened, the stock crashed 20% on Friday after the US FDA rapped the company on the knuckles one more time. It banned the Punjab unit because of quality control violations. This seems to be happening a lot with Ranbaxy. What do we do with the stock for anybody who's holding it right now?
Yeah, it's a little unfortunate, and I think they do seem to be in a spot of trouble, because what it simply now means is that since the latest facility that's in trouble, they won't be able to send APIs from there to their home laboratories in the US. So they'll have to source the APIs from elsewhere. So you automatically take a price hit.
Actually, for those of our viewers who are not familiar, what is an API?
API is basically the raw material to make any drug, very simply put. So the active pharmaceutical ingredients, but they form the raw material for the company to actually make the medicine, which was being made in the US. So, and they had a couple of filings in the US, which they were going to be for which they would have exclusivity for the first 6 months, and that's always a big advantage for pharma company. So you don't even know what will happen to that. So like that's the worst scenario, like if there's a comment on those two exclusivities. So at this point in time, we don't really know. So let's assume that it stops at not being able to provide APIs and they have to source them from outside. It means they'll straight away take a hit on their EPS, which I think analysts I've heard I've said as much as, if they had earlier thought that those two products could contribute 70, 80 rupees, it's straight away half of that. That's how their margins will suffer. And this will continue for the next couple of quarters at least, till they're able to, sort this thing out, because, these things are not so easily sorted out. So I think it's a big negative from that perspective, and it's unfortunate that really the company has also allowed it to get to this stage. So I'd really just wait and watch for a while, because this correction on the stock has been very severe. Possibly it's factored in a lot of the negatives, but there is also a distinct possibility that it could go back to that earlier lower level that it made, which is also what market is talking about at this point in time. So it's, I think, clearly on the wait and watch list, and I certainly wouldn't recommend anybody buying into it now. It's unfortunate that he bought it at 393, and he was possibly seeing just till yesterday a price more than that. So it's a little unfortunate. So maybe he would have to wait it out a little while to see what clarity emerges on this. But I wouldn't recommend anybody new to buy it for sure.
In fact, the other area of the market I really want to look at right now are mid-caps. Now, we know that the mid-caps cracked this week. It's been a tough couple of weeks for mid-caps, in fact. I'm going to bring in my colleague Ajay to give us an update on what's happening with mid-cap stocks. Ajay.
Well, that's correct, Faye. This time around, the broader markets were weak, have lost again about 0.5% on the key indices. In fact, it was an earnings-heavy week for the mid-caps. But interestingly, a lot of high-quality mid-caps, which till now have been on the growth trajectory and management commentary has been very bullish, have cracked a lot on profit-taking by HNIs, on perhaps one-offs in some of the stocks coming in, which of course had already been indicated by the management, but market did not take very kindly. So these are good quality mid-caps which have corrected. Stocks like KPIT Technologies, M&M Financials, even SKS corrected sharply ahead of the numbers, which are good. Kolte Patil, very strong mid-cap company from the real estate space. All of these 4-5 stocks are examples of good quality earnings stories unfolding, but for various reasons, one-off bad quarter or the stock price running ahead of fundamentals. Most traders on the street, however, believe that some of the high quality mid-caps which have corrected right now should be accumulated at lower levels for a multi-quarter play from here on.
All right, Ajay, thank you for that update. Let's focus on KPIT Tech and M&M Financial. What happened with those two stocks? And if anybody's watching right now who's holding those two stocks, that's a bit of a rude shock they had this week. What would you recommend they do?
See, KPIT Technologies has done really. Actually, both stocks have had very good returns. So I would say one part of their going down is straight away profit booking. KPIT Technologies for the longest time, I think, was in that 110, 120 levels. Still, you've seen this move up. It's a company that's doing reasonably well. So, I don't see any concern from that front. So if this is just a profit booking phase, then it will pass over. The stock will consolidate, around current levels. So I think for me, that's a hold. I think similarly for M&M Financial, one would expect that going forward, things would look better for them, because they do have a very good presence in the retail space for financial products in the rural parts of the country. And I think somewhere the management, this quarter numbers were bad, but somewhere the management seemed to indicate that because in the south monsoons are delayed, you could see a better the coming quarter could see a better recovery in the south. And again, here the stock has actually done reasonably well. You know, if you are taking a slightly longer view on the stock. So I think for me, I would be comfortable holding on to both these stocks.
All right, time for a very quick break, but when we come back, we'll take a look at Sharmila's own portfolio. We'll talk about stocks like SBI and L&T. Don't go anywhere. Welcome back. You're watching All About Stocks in ET now. Thank you for staying with us. Sharmila Joshi is with us as well. And it's time for us to look at Sharmila's own portfolio. Now, the portfolio that Sharmila designed on the 21st of December 2012. It's over a year old at this point. It's currently at an overall loss of a little over 9%. The Nifty over the same period is up 7%. We're going to take a look at the stocks in Sharmila's portfolio. That's L&T, Central Bank, Godrej Industries, ILFS Transport, Ipca Labs, that's done fairly well for us, JSPL, Kanhaiya Ceramic, M&M and SBI. Let's talk about Central Bank, down 40% since we bought it. Is that a stock you want to continue to hold on to?
I think we'll switch that, because I think, you know, I switched BHEL earlier for L&T, and that's played out in my advantage. So I think if I get out of Central Bank and I replace it with IDFC, I would have a better portfolio going ahead, a stronger portfolio. So I'll replace Central Bank with IDFC.
Well, you've already told us why you prefer IDFC on this show, but let's also talk about SBI. That's down 30% since we bought it, and I'm sure it's making a lot of other investors also nervous. How long do you think we're going to have to hold on to SBI before we see it turn around?
At least a year, I think, you know, because, you know, really the banking space, the way it's playing out, and for recovery to come there, and then for the recovery to start reflecting in the larger stocks, it's going to take a while. So, you know, NPA concerns, you hear so much about all these things, and SBI is also currently in the, you know, they have a new chairman, new chairperson, and she's in the process of cleaning up a lot of things happening there. So it will take time. I would give it at least a year before I expected a decent return from State Bank.
Two other stocks that are not performing, ILFS Transport and JSPL, both down about 40% each. Between the two of them, are you holding on to both? You would like to make changes there as well?
I'll sell ILFS Transport, because again, I think this is a sector that's going to take a long time to recover. And I'll switch it for IT, which I think will have a better year. So I will replace it with Hexaware, where I have a target of 180.
And JSPL, holding on to that stock?
Yes, I mean, it is, yeah, I'll continue to hold on to that, because I think that this year could be a little better year for metals as a sector.
Two changes there in Sharmila's portfolio. I'm going to give you a recap of the stocks as they stand right now. There's L&T, IDFC, Godrej Industries, Hexaware, Ipca Labs, JSPL, Kanhaiya Ceramic, M&M and SBI. If you have any questions for Sharmila on that portfolio or about anything else she said on the show today, feel free to write to us. Our email ID is at the bottom of your screen. Thank you so much for spending time with us this week. It's always a pleasure to have you. You can reach me personally on Twitter, and you'll find a copy of this show on our Facebook page. Thank you so much for watching.